Welcome back, everybody, to Hoot Loot. Today's show, Saturday, the 22nd of the year 2022, is called Wall Street Greed Makes Investors Bleed. Ding, ding. I'm sorry, but the ding, ding is for the poor investors that have been fleeced by all those initial public offerings that came at an inflated price, went way the hell up. Of course, the offering price was only to friends of the firm that was making the offering. But so you didn't get that. But if you were so unfortunate as to buy into the hype, you got your fanny spanked pretty good. We this is the place to be informed, be amused, but never be misled. We do not hype. We do not sell. We do not get bonuses unless we do. I don't know what the hell we'd have to do to get bonuses. But I'm telling you right now, Wall Street has fleeced the, what they call Main Street, which is, sort of Joe investor, the guy that's new, the person that doesn't have experience, and that person is getting absolutely clobbered. But then so are some professionals too. So there's something to take out of that too. We're going to have as a special guest next week, John Williams from Shadow Stats, who's going to tell us all about how numbers like unemployment, inflation, and other things are manipulated for the benefit of the incumbent who wants to be reelected. And that's why we want you to vote out all the incumbents and why we're so adamant about that's got to be the only way that we're going to take this country back and have a free market again and things go back to normal. Other than that, I've never heard of a politician giving back power. It ain't going to happen this time. So the financial and economic landscape is not looking good thanks to these guys back here, because all they know, actually, they're not here today, thank God. But, all they do is financially engineer. They create value by shuffling paper and rearranging capital structures. That is not how you create wealth. And, I've said it a million times, you create wealth by producing more goods, not paper. In any event, don't worry about it. I know a lot of you right now are probably panicking, and for good reason, because the market looks crappy. But that's what we're here for. We're here to guide you out of this thing, minimize your losses, show you the path that works, and put you into something that will perform and also hedge you against inflation and give you a chance, that you haven't yet had because you're fed a bunch of bull, all the time. All right, so with that, if you'd please like and subscribe, it's all over the place. We would love to have you as permanent members of the Vote Out All the Incumbents family. And please, if you can, share this with your friends. The information here is so valuable that I'm going to bring, especially on cryptos. I'm going to destroy that myth today. All right? I'm going to destroy the crypto myth today, once and for all. All right? And we're going to do that in just a minute when we're going to go to the charts. All right, the first chart you're looking at, we're going to be a little commercial for a change. I mean, we don't charge anything. We still do have to pay our bills, but we've designed some great shirts, and we have some great artists on staff that are doing that. This first one is a Hoot Loot Hoot Entertainment shirt with Hooter the Owl, our new mascot. He is wiser than any owl I know. So, we'll be having these available down the road. And, again, it's just a little commercial timeout, a little huckstering. I hope you don't mind, but, Ace needs to be fed. And, dog food doesn't fall off trees. I don't know, I think I've ever heard that one, but they don't. It doesn't. All right, so let's go on to some of the canaries in the coal mine. Okay, we're going to bury crypto today. We're going to bury it, all right? But we're going to start off with Bitcoin for the last year because it is so indicative of the, the flighty new investor dollars and the fraud and the hype and the this and the that. And basically, no one knows anything about this. Now, we did a bunch of research on this. Bitcoin bites back. Please take a look at that. No one yet has refuted one thing about that program that it's a fraud, okay? It's a password, and there's nothing to it. And I'll sell you a password at 1/10 the price that you can buy a password, on Bitcoin, okay? And if you lose it, I'll even let you retrieve it. But Bitcoin has gotten just hammered in the last few days. And the reason for that is that now Russia has joined China in outlawing all crypto. You even mentioned the word crypto and you're going to get your head chopped off. But now Russia's gone, China's gone, and, the sponsorship is gone. And, basically, there's no value in these. I mean, again, I'll ask the question, who needs them? Think about it. No one can answer that. All right, so with Bitcoin, we made what looks like a double top, and it is way back down close to its summer lows, but it's actually performing quite well. And we'll show you that in a minute as we destroy crypto. Just keep this chart in mind and some of the other ones in mind, because the contrast between this and others will speak volumes, okay? All right. Tesla, one of the other canaries in the coal mine, actually up to 4 now. They're tweeting away, although a couple of them are starting to wobble on their little perches. You know how it is when that coal gas starts emanating the mine. Tesla has held up remarkably well. I think it might even be a bull flag. I mean, I don't get it. Tesla, after all, you have to understand something about it. Right now, it has something like 65% market share. And with all the other companies coming out with electric, different this and trucks and this, Ford is almost going all electric. Okay, they're going to take some market share. Tesla's not going to end up with 65% market share, nor when Apple joins or when Waymo joins from Google. It's just not going to happen. They're going to go down. And the size of the market is limited, okay? Everyone will not be driving an electric car. It's not the future. For one thing, and I hate to, blow the bubble out of the green crowd, but it creates more pollution than it saves. And if you want evidence of that, take a trip down to Beijing and walk through the pea soup down there, with goggles. You'll probably need night vision goggles just to walk around in the daytime. And they inherited this incredible pollution problem because these batteries, they create so much that you don't save it, over the course of the auto's life. Because you're still using electricity. The electricity is still coming from coal-fired plants, which we still don't have enough of. Okay, so how on earth is this going to be an economical car, let alone a green car, when it's converting energy? Now, one of the things that I want to bring up is that when you take battery power to electric power to battery power to electric power, which is what you do with a Tesla, you lose something. Okay, it's like putting a battery in a transistor radio. Okay, over time, okay, even if you don't use it, over time it will degrade. So will these batteries, okay? And the farther that every time the electricity goes into the battery and every time the battery is used to power the car, there is a loss of efficiency, all right? Now, you don't know that. That's the thing. You don't know that. Because who would tell you? Elon Musk? That's a good one. He wouldn't tell you that his life depended on it. Oh, he also took a loss in Bitcoin, by the way. He's not telling you about that either. I just read about that today. But Tesla has got so many problems. There are people now suing the company because of the fact of deaths occurring with this. I don't know. Maybe it's not an impossible dream, but remoteless driving is really going to be tough to achieve in its completeness, and that's all there is to it. Right now, Elon has admitted that he's years behind it, though he's charged people for it, but he's years behind it. So, Tesla also, what I want to mention is that, this company does not have a lot of cash. Okay, it has 16 billion, which sounds like a lot, but it's got 10 billion of debt. Okay, and they don't make money. All right, you may think they make money because they're up so much. But look at their financial statements. You know how they make money? They make money by selling carbon credits. Carbon credits, okay, are basically because their fleet mileage is so much higher. They can sell part of that credit to someone who is not, to an entity that is not meeting the fuel standards that have been set forth. So that's how they're making their money. Okay, that's how they're making their money. Not to mention, they've gotten $5 billion, according to the LA Times, in subsidies. Now, why would they need subsidies if this is such a good idea? Okay, that's all I want to know. Nothing needs subsidies that can stand on its own 2 feet. Simple. Okay, simple, simple, simple. But he is a genius. Yeah, he's a genius con man, I'll tell you that. We're never going to Mars. We're never going to the moon. That's a pipe dream. He is the king of promising one thing and then making an excuse as to why it can't happen. And then it happens years later, and maybe it doesn't happen at all. But you know, the thing I've always said, why not pick Mars? Because if you don't make it, it's the impossible thing anyway. No one's going to blame you for it. This, on the other hand, we'll see. Now, the one thing about Tesla is that it is not worthless, not by any way, shape, or form. It's just overvalued. The reason is it gathers all this information every time you drive. It's like it's like Google tracking you. When you do Google searches, and all of a sudden, you're tracking something, and all of a sudden ads show up for it. So be careful what you search for, because the ads for that will show up, and people may see that you've been searching for it. But that's the kind of thing that it has, and that's a valuable consumer asset. They've also come under heavy fire for the solar company, and they paid something. They bailed it out for something like $13 billion. Well, that's not a lot of money, but when you don't have a lot of cash, it's a lot of cash. They probably did. I think they did a share for share. Solar panels are another one that is just ridiculous. I've had solar panels. They don't do anything. Their amount of conversion of sunlight into that panel down to the electric level is not that great. Okay, I had solar panels. I don't even know if I saved a dime on electricity. The only reason that they're around is because the government subsidizes them, because it's so cool to have green power. You know, it'd be even cooler, less pollution, okay, and less building of solar batteries, which also creates pollution. All right, that would actually be pretty nice. So Tesla's just in a world of hurt. Don't ask Elon that, because he thinks he's on top of the world. But I will tell you this right now. This company will hold some of its value. There's no doubt in my mind about it. But on the other hand, $1 trillion, no, it's not worth $1 trillion. It's not worth $1 trillion. That's all there is to it. It's worth something, but not $1 trillion. Okay, so I anticipate it has earnings next Wednesday. I anticipate it will stay in this bull flag that I've drawn, and on Wednesday, we'll see. But my gut feel is on Wednesday it will gap down. I just have a hunch, but we'll see. All right. This is another canary in the coal mine, and this canary is about kaput. I mean, this is called Ark Innovation, and you should put that canary and 2 canaries so they can mate on that ark and sail them away. But I mean, this is basically 100 pooled, hip, trendy, hyped, overhyped. Oh, I'm so cool to own this stocks. Okay, including Tesla. Tesla's one of the biggest holdings of Ark, which is why it isn't down even more. It's already down this year like 60%. This year alone, 60%. 100 companies down 60% on average. Okay? We're talking about DraftKings and Peloton, the stationary bike company that now is suddenly, persona non grata, and Palantir, and you name it. If it's been in the hot list, Uber and all those other companies, all the air is coming out. We showed you Beyond. We showed you a couple of the streaming companies last week. That's happening across the board. The Hipper and the IPO, all just sinking and sinking and sinking because their business models don't necessarily make sense. And no one bothered to actually look into that. It's amazing to me how little research is done and how people act on pure emotion and not information. We're going to give you that information. That's our job. And also hopefully convince you what information is important. So you don't just go out headlong, buy something, and are shocked when it's down 80% just because you've heard it's so cool. DraftKings, online gambling, it was the pandemic trade. And all we need is a stock in online gambling so you can gamble in online gambling. Right. Okay. One thing I wanted to show you about this, and I'm going to show you this over and over today. One of the things that is going on here, one of the reasons I am more confident that we have reached a long-term bull market top is what you see here, all buyers underwater. Do you notice if you take the closing price on Friday and you horizontally look at how far back you have to go to find a price lower, okay? And you look at the volume, every buyer is underwater, okay? Now, I may have been someone that urged caution a little too early, but I don't look that dumb right now because I sure didn't. I wasn't urging it way back then. I was urging it as it was getting higher and it was going higher. Not necessarily this company, but the whole hype trendy thing. And right now, you'd be sitting awfully pretty. If you had sold, even if you had sold too early, you'd have had a profit and you'd go, oh, thank God. I know it's hard to do because you always think, oh God, I should have held on for another 20%. Yeah, you could have, and yeah, you could have given it all back. No one is upset about taking a profit ever, okay? Yeah, you wish you had more. But at the end of the day, it sure as hell beats getting creamed. And I've had that happen to me many, many times by being too greedy. Please don't be too greedy. That is the kiss of death. Take your money off the table before the table takes your money off of you. That is something you should always keep in mind. You can't go broke taking a profit. All right, finally, number 4 canary. This one also is kind of stumbling. I don't think it can even cheap any longer. It's probably going cheap. But this is the Renaissance IPO. Now these are the IPO companies that have fueled this incredible mania. And here's an ETF which holds them. And I've gone back 5 years, same thing as Ark. If you look at this and you extrapolate out, almost all the volume occurs, during the period that's above you now, if you're still holding it, okay? So everyone is underwater right now, pretty much that has ever held this thing. That's a horrible dynamic because what it means, okay? What it means is that you have a bunch of people who are ready, who are going, oh my God, what a mistake I made. I shouldn't have held on to this. These people are looking to get out. Okay, that's all there is to it. You're going to have to chew through all that supply before this thing will ever be able to run again. And I would say chances are, there'll be a bounce here and there. Now, don't get me wrong. It's not going to go all the way down. But on the other hand, it may just go all the way down with bounces along the way. That is a typical bear market. The bounces occur, sharp ones, with one purpose only. That's to keep your hope alive. And hope, as I've said before, is a crummy ally, and it causes you to procrastinate and not take decisive action, which you should. The best loss is your first loss, and it's a quick loss. I far prefer would do that than pray that fundamentals are going to rescue me. They never do. The market's not about fundamentals. It's not about fundamentals. It's about the movement of cash, supply and demand, and perceptions of the future and value. Those things are the things that actually make a difference. Now, value is a long-term indicator. It sure hasn't mattered for a long time, but it will, because you have competitive other assets to invest in. And so if it's not competitive, it's going to go lower. So that's where value comes into play. What I'm starting to see right now is the market is starting to go to equilibrium. And so all that complaining I've been doing about the market being irrational and not understanding it, I'm starting to understand exactly. It's starting to do what it should do under these circumstances. It's just been held back. All right, so onto the indexes. The Dow Jones is right at a point of support. It's in a bear flag. I'm not ringing ding ding on this one yet because I think we are at a place, and I'm going to show you this too, where a bounce is going to occur, and we're going to create yet another shoulder. I'll show you that in a minute. We're going to create a rounded top, and everyone is so bearish right now. My God, listening to CNBC, you think the world was falling apart. I think people are going to get nice and freaked over the weekend, and either we wash out on Monday or we go up on Monday. I don't know. I think we're ready for a bounce. So many things are right at support areas, and it would be a perfect way to fool people who've been shorting and all that kind of stuff. So I would not want to be short here, but I would want to be short later. And I probably should have gone ahead. The Nasdaq 100, here we go. Ding, 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 ding. Boy, that looked like I was stabbing somebody, didn't it? I really wasn't. I was just going ding. I don't have a bell. I will get a bell, I promise. All right, so the Nasdaq also broke down, and if you look at it, it's got a rounded top, a small one. That the first red dotted line was a break up. Now it's got a second possible broader one, with the second dotted red line at about 14,500. This is a perfect support zone for it. And so what I'm looking for, and this is just a guess, and this would be perfect if you're trapped in some of those crummy, stupid, god-awful names, okay, the hip names. It's probably going to rally back up and make a shoulder, a right shoulder, which would be a topping pattern nonetheless, but it would fool people, and it would wash out the shorts and give all of you a chance to unload, at least at a better price than you are right now. You're never going to see those highs again. That just is not in the cards for many, many years. I don't know if I'll still be alive then, but who knows? I've been alive for a long time, so I might just be alive for that. So let's go on here. Ding, ding! Now, we are so excited about what we're doing at Hoot Loot here. We've been getting nothing but cards and letters thanking us. Well, some of them thanking, some of them cussing us, about cryptocurrencies. They just get, I'm sorry, don't shoot the messenger. But in any event, look at this beautiful shirt right here. Ding, ding. You can also use that ding, ding as a fire the politicians logo or motive. Ding, ding, get them out, fire them, bring in a new crop that actually gives a damn about the American people and not about being reelected and fleecing us. The Nasdaq 500 weekly. Okay, now this will show you more clearly the bigger, more broader head and shoulders. And my expectation would be around 15,500 for a shoulder. And if it fails there, okay, we're done. Once it breaks 14,400 or 500 or so, and it's peaked at around 15.5, this is going down to 12. This is going down to about 12.2. So it's going to have a hell of a drop. And believe you me, we have had so long of a consolidation. And there's so many people that are going to be underwater when this happens, because we're breaking below a long pattern with a lot of volume in it. And so every buyer during that period of time is going to be underwater. That creates a horrible dynamic. It really does. It creates a psychologically horrible dynamic where people are going to want to sell and just recoup what they can. Okay, so be aware of that. And I'm going to show you a number of examples of that today. S&P 500, now this one gets a ding ding because we have broken out of a ascending wedge, and this thing just fell like a ton of rocks. But again, I also think that there's a very good chance, because we're very close to support, that we will see a bounce and possibly some kind of a shoulder to throw everybody off. I mean, right now, the conventional wisdom is, and I even saw this on the Drudge Report, it said, is the super bubble over? Well, if the Drudge Report's asking that, it ain't. Well, actually it is, but it won't appear like it is, and we're going to have probably a somewhat sharp rally that's going to draw people back in and make them think the bull market is still alive. It is not. That is just going to be, it's going to be like a corpse that just kind of goes, for a second. That's about it. It's a corpse right now, or pretty close to one. S&P small caps also at a point of support. They're going to break down at some point too, but they could bounce. And we're at a point where so many indexes, stocks, everything else are at support areas that, we probably have another opportunity if you want to be really cool and go short the market or, buy one of those inverse ETFs. There'll be another opportunity. I would not want to hold over this weekend. I have no idea what kind of news we're going to get. I have no idea whether the Fed's going to raise rates, whether the Fed's what's going to happen, and what they're going to do on Monday morning. I would just as soon be flat over the weekend. Flat meaning no positions. Okay, this is a time to be in cash. So, S&P 500, the S&P 600 small cap, due for a bounce, but that's about it. The transportations, unfortunately, look like they're breaking down. And they are so critically important to the economy. They could bounce too with everything else, but they clearly are not showing the strength they showed before. And a lot of the components of transportation, whether it's personal transportation, airlines, or it's packages, UPS, FedEx, they're not looking so good. And we'll show you a little bit more about that soon too. All right, now it's time to destroy crypto. So pull up a chair and take notes and listen carefully, because crypto will never look the same to you again. This is Bitcoin 5 years, all right? Now, what you'll notice, peak to peak, up almost 300%, okay, between the 17-18 peak and the recent peak last summer. It's gone up about 300%. Okay, so that's something to keep in mind. Just hold that thought. Ethereum, this is Ethereum for a year. Ethereum just got creamed today. And, I kind of looked it up as to what the hell Ethereum does. And it's not really its own cryptocurrency. Apparently, Ethereum adds something to Bitcoin. So, you buy Ethereum, you're still getting some relationship to Bitcoin. You are not diversifying, okay? That's all there is to it. And it just so happens the chart happens to look like Bitcoin, and it took a hell of a dive today. Mark Cuban, sorry, pal. I guess this one may not be as good for you as some of the other ones are. Here's 5 years. Again, it looks like Bitcoin. It's gone up about 250%, but it's broken down. Okay, so it is broken down from its rising trend line. And, again, I will say that it's an entity that is an existing entity, unlike Bitcoin, which is a fantasy. And there is somebody behind it, supposedly. I've never met him. I have no idea what it's worth. I don't know what services it provides, to tell you the truth. And I don't really care, because, I don't understand enough about these, and I understand a lot about these. So the people that are buying them that understand nothing, that's the part that slays me. It's the people that say, oh, you gotta own Bitcoin. It's the future. Oh my God. While they're slobbering, with greed. It's so funny. It's just so funny. All of a sudden they become experts overnight because they made money. There's nothing that makes you more of a genius than a bull market. That's all there is to it. You are a genius in a bull market. You are a goat in a bear market. Be prepared, okay? Be prepared. All right. Okay, this is the Grayscale Bitcoin Trust. Now, all this owns is Bitcoin. That's all it owns. Doesn't own anything else. And it's like an ETF. It was started by the Winklevoss brothers, who are the arch enemies of Mark Zuckerberg. And basically, they started this trust a while ago. It was not exactly an ETF, but they could do it this way. And it had some advantages because there would be more protection about being hacked and losing passwords and all that other stuff that dogs every Bitcoin holder, will not dog a Grayscale trust. But on the other hand, while Bitcoin was up 300% peak to peak, Grayscale was up 50% peak to peak. And if you look at it now, I drew a red line, a red dotted line. Now it's below the closing price on Friday because Bitcoin is down another 10% over the weekend. And who knows how it's going to end up on Monday. But the cryptos are just getting clobbered. Do you think somebody's figured out that they don't do anything? Well, I know Russia has something to do with it. They must have figured it out because, they did exactly what China did. It really has the only value it has And I'm not even sure it has that value, is for illegal transactions. 45% of Bitcoin transactions are not legal. They're money laundering, they're anything but. But, we have somebody looking in the back door. And so the FBI knows exactly when a lot of these big deals are going through. But in any event, Grayscale, if you look at the blue boxes here, look at all the volume and all the buyers that are underwater. So if you couldn't make money in Grayscale, you're probably down in Bitcoin. You're probably down in everything. All right? And that's the thing. Everyone seems to think that people who bought crypto are geniuses and rich. No, they're not. No, they're not. They're lemmings who are about to become poor. Okay? None of them know who the president of Bitcoin is, because I've asked that a million times. Where headquarters are, I've asked that a million times. They don't know squat. They don't know. You ask somebody the earnings. Bitcoin cannot earn money. It is not an entity. It does not exist. And they'll tell you, oh yeah, the great fourth quarter earnings report, the things are unbelievable. And they want to sell you Bitcoin. And they'll ask you, do you know anything about cryptocurrencies? Oh no, I don't know a thing. But anyway, Grayscale is showing you the softness around the edges in Bitcoin. Okay, Bitcoin Cash was a spin-off from Bitcoin. It was what they call a hard fork. A hard fork is when a portion splits off. It's kind of like a spin-off, or part of the company disagrees with the other part of the company, or it's not really a company, but there's some disagreement, and so they take a portion of the business with them. They form a Bitcoin something. There's got to be like 20 Bitcoin. There's Bitcoin Diamond, Bitcoin Gold, Bitcoin Platinum, Bitcoin paper mache, Bitcoin Ace, Bitcoin Hoot Loot. They should be so lucky, Bitcoin Hoot Loot. I wouldn't let them use the name if my life depended on it. But they're at least like 20 spin-offs. Some of them are worth nothing. Bitcoin, it's still worth $5 billion. And I want to show you this now. Okay? Remember that Bitcoin itself, peak to peak, was up 300%, and so is Ethereum. Not Bitcoin Cash. It's down 60% peak to peak. It's down 92% as of today. And as a matter of fact, this graph does not reflect the full damage. Bitcoin Cash is trading another 10% lower just before we started airing this. So everything is getting hammered big time on low volume, low liquidity over the weekend. That is one of the risks of 24/7, 365-day trading, is that if something happens, you don't have the liquidity to sop it up. And and basically that's why you have these big moves. Bitcoin is down something like 25% in about 36 hours, and down about 50% in about 2 months, as is almost everything else, if not more. Ripple was supposedly one of the great altcoin hopes, and look at that. It's making a new low. Look at that drop, and it never, it's down about 60% just in the last 2 months. What happened 2 months ago again? Oh yeah, the ETF, the pool of passwords came out, and a whole bunch of people had to have it, and so they drove the price up to another high, and they had a little bump here and made people all excited now because Joe Mainstream could buy it. Well, Joe Mainstream can buy it. Joe Mainstream can go broke buying it. Does Wall Street care? No, because they earned a hell of a fee on it. Wall Street greed makes investors bleed. Okay? Their job is not for you to make money. Their job is for them to make money. All right? So they're going to tell you what they need to tell you. All right? Their bonuses, Goldman Sachs is having a record year. Their bonuses are up 50%. Jamie Dimon, who is with Chase, one of the, JP Morgan, just gave himself a hell of a pay increase. Good year, if I must say so myself, Jamie. And that's kind of what happens. Now here's Ripple 5 years. Now look at this. Peak to peak, it's down something like 60%. And it's down now in total something like 90%. I don't call this the future. Okay? I don't call this the future. If it was the future, it would not be trading this low 5 years after starting to gain notice as an altcoin. It's not, okay? And if this doesn't smack you in the face and tell you, oh my God, where did I get the impression that cryptos were so cool? Gee, the same place that gives you mental illness, basically. Cable news. Please don't watch cable news. Oh God, you know, I don't even want to talk about it. All right, MicroStrategy. Now, here's another example. MicroStrategy was, I think, a software company. They decided last year, a little more than last year, to start buying Bitcoin, to be a Bitcoin holding company. Okay, they even borrowed money to buy Bitcoin. So they leveraged to buy an already volatile asset because Michael Saylor, the CEO, was so confident. He said he will never sell his Bitcoins. Never. Oh, yes, you will. When it's time to finance your debt, Michael, that's when you're going to do it. And MicroStrategy, I looked at their balance sheet this morning. You're not going to believe this. You are not going to believe this. Okay, I'm going to look down for a second here because some of my notes, so excuse me. But MicroStrategy, they have 125,000 Bitcoins right now. Okay, that's how many they bought. And that they have that's worth that was worth about $6-7 billion. Now it's down to a lot less. Okay, they only have 56 million in cash. Okay, 56 million in cash. So if they have a margin call or something like that, I don't know, but that's not a lot of cash. And as a matter of fact, that's no cash. And are they going to actually be able to raise it when the stock is plunging like this? I don't think so. So Michael Saylor, you may just have to sell that precious, infinitely valued nothing password so that you don't go bankrupt. And if you've delayed too much longer, you're going to be underwater too, pal. Okay? That's about the dumbest corporate move I've ever seen. I don't know you personally. There may have been a better reason that I just don't know of. But I'll bet you if you bought any other company, or if you bought a company, you talk to the management, wouldn't you? You do due diligence, you'd go down there, you'd have discussions. Not with Bitcoin. You just take it at face value. Here, I'll buy some. I'll sell you a password. I got a whole bunch of them, Michael. Unbelievable. But look at this. Again, the blue box shows, look at all the people, all the buyers that are underwater. They're going to be looking to get out. And this thing is likely to open up even lower on Monday because it doesn't trade over the weekend like the cryptos do. So this thing's going to catch up on the downside, and it moves mostly with the Bitcoin. And I'll tell you, it had a little spike. You had a fleeting moment of pleasure. Oh, I'm the king of the world! Like Leonardo DiCaprio. I'm sure you felt that way. I don't think you do now. And this does not look good. I would not want to be you right now because you're going to have to apologize. This is gross negligence, if you ask me. Your board has something to answer for, and so do you. This has class action suit written all over it. All right, Overstock.com, another one. This is another one-off type of retailer that took Bitcoin early. Of course, no one used it to buy anything, but that's besides the point. But it trades like Bitcoin, and you can see the two peaks, 2017, 18, and then recently. Now, what you'll notice is that, again, if I extend the red line out, which I did too high, look at all the people that are now underwater. Those people are going to want to get even, and you're going to have a hell of a supply to chew through. So this is not good. I mean, this is just not a good sign. And then finally, whenever I talk to the crypto fanatics about what a ridiculous fraud this thing is, you know, the ones that finally kind of the light goes off, well, then they'll default to blockchain. Oh, but the blockchain analysis, the blockchain technology is so cool. How do I say this? It's a ledger, and it's not cool. okay? And I'm going to show you how it's not cool and how no one's paying up for it. Riot Blockchain. If I were a shareholder of Riot Blockchain, I'd be rioting right now. Look at this. Again, not this thing. Again, look how low it's gotten. It's gotten below $15, and that means the majority of buyers are underwater. Okay? So to have somebody go around bragging about how much they've made in this sector, well, to show them this, call them on it, because there's no way the majority of people are up right now. No way. The only thing you can do now is mitigate the damage. That's it. This is not time to play offense, and buying on the dip, again, dumb. People that buy on the dip like Saylor did, dumb. That's all I got to say. You know, there was a saying in the hedge fund business about catching a falling knife. Well, looks like he did. That went right through his hand. Okay, so let's go on to the regular stuff. Treasury inflation, inflation protected securities, kind of holding around that 125 level, did penetrate it. There is some indication that inflation is pausing in a few places, but pausing only. I don't think we are anywhere near a crest in inflation. The only reason it looks like it's pausing is because there's a tug of war going on, okay? The worst possible tug of war. On the one hand, you have a recession threatening to turn into a depression, so you have demand going down, okay? That will moderate price increases because demand is going down. But on the other hand, the cost of producing goods is going up. That's called inflation. So you're going to get price increases, and you're going to get softening demand, and probably a pretty damn severe recession to go along with that coming right up. We talked about is a depression imminent back in December, crypto collapse, all that kind of stuff. A little early, but we gave you plenty of warning that this was going to come. And it is sure enough coming right now. The good news is you may just get a bounce and you may be able to get out, and there'll be other things to do. And we're going to show you some of those. Okay? There are some things setting up that look terrific. This is a CRB index. This is going up partly because oil is going up. Oil's on its way to $100. OPEC has lost control. Shale, you know, no one's going to want to do shale right now because of the administration. You know, at least with the prior administration was very pro-drill. This one is very no lease, you know, no permits, no drill, no nothing. So we're not going to get that supply. The supply that we did get was from the Strategic Petroleum Reserve, which dropped prices for about a nickel for about a week. And that was an incredibly poor use of that. Here's crude oil, did make a new high. It's looking like it's on its way to 100. There's some entities that think 150. I don't know. You know, that's getting a little ahead of ourselves here, because in a recession, depression, this thing might soften up quite a bit with demand. I can tell you right now that miles driven gasoline, even though gasoline prices are up, miles driven are down. Okay, so you have lower demand and you have higher prices. That's stagflation. That's what we're looking for. Now, when the economy grows, it grows because either unit output grows or it grows because prices are up. Now, the more prices are up, that's no good for anybody. But if you produce more goods, that is good for somebody. Right now, there is no increase in unit production. It's all in prices. So we have a pretty crummy environment, and it doesn't look like it's getting better. And the Fed's doing nothing to help it. And the Fed, as a matter of fact, the Fed ought to get out of the way. You know, they've done everything. They've done everything to cause these bubbles, and then they ride into the rescue and save us one more time. Well, I don't know if they're going to be able to do it this time. Sometimes you cry wolf too many times. Livestock made a new high, and all that despite veggie burgers and Beyond Meat and Impossible Burgers and all those chemicals that I don't know. Maybe they use those in the jabs too. Who knows? But people eat those things. Oh, good. Chemical burger. Gold is looking actually really good. And we talked about this 2 weeks ago. I'm going to continue to talk about it. Gold is looking really good. It's going to be the surprise of the year, in my opinion. It's really close. Don't touch it quite yet, but we're going. Silver too, constructed pattern. And, as we have inflation, as the dollar does depreciate, and it will eventually, these should do quite well. 3-month T-bills. Now look at this. This thing has soared to 1.7 on Friday, and the Fed funds rate is 0 to a quarter. Gee, talk about holding a beach ball underwater. I mean, that's just unreal. And the fact of the matter is, this is telling Jay Powell and everybody else, dude, open your eyes. He's good. The Fed is going to raise rates sooner, sharper than anyone expects, whether it's 50 basis points in a surprise announcement. They meet next week. Now, that's another reason why we're going to have a bounce, because they don't tend to do much in front of Fed meetings, and there's earnings reports and all that kind of stuff to kind of keep the market from going in a huge direction. But I would be somewhat willing to bet, I'll give it slightly greater than 50-50 odds, that we will see a surprise emergency rate increase of 50 to 100 basis points. If they don't, they're going to have missed another opportunity, because I'm telling you this, if the market is collapsing and we are still buying $115 billion worth of securities a month, okay, we only tapered from 125. Okay, so the drug dealer took just a little bit away from the addict, and the addict is already like having withdrawal symptoms and collapsing. 5-year treasuries spiking up. They're flat with the 3-month bill, and 30 years are at about 2%. Not much going on here, but what is going on here that's important is the yield curve is flattening. You have short rates that are higher, long rates that are just barely higher, and as that starts to not steepen, but actually invert, those are great leading indicators of recessions and worse. And we have negative real rates, and those are indications of phenomenally brutal recessions. The last time we had them anywhere near this high was in 1971, and the rest of the decade was just a disaster. The market went to, the Dow was trading as low as 580. Wouldn't you have liked to have bought it at 580? But you wouldn't have, because the economy looked like crap. Okay, Apple still looks pretty good. I'm not going to spend a lot of time on this because this is an exception to the rule. But we're starting to see things break down. Here's Amazon for you. It hasn't even announced earnings. It's right at a place where it could bounce. But look at that move. I mean, that move is like 100 points, in one day. And, again, once this thing breaks below that red line, all these people that bought in that horizontal period are underwater. And they suddenly don't like Amazon anymore. They just want to get the hell out before they lose even more money. That's psychology. That's human nature. I've been there. I felt that way. I know exactly how it feels. Meta platforms, I don't even know what the hell the meta platforms means, some kind of virtual reality. All I know is the Facebook brand name just got trashed. And Mark Zuckerberg, I'm not going to talk about it too much, but the class action lawsuits that are coming down the pike, the antitrust legislation, this guy's going to be in court for the rest of his business career. And I don't know whether the class action lawsuits, which allege all kinds of things emotionally done to girls on Instagram and all the scamming and all that other kind of crap that this guy allows to occur without looking, that's going to come home to roost. And an interesting fact I heard today, Meta Platforms spends more on lobbying than any other company. $20 million a year. Okay, that's twice as much as any other company. Why do they need to bribe politicians so badly? That's what I want to know. And vote out all the incumbents. They bribe politicians, but we need to get rid of them because they don't want, we should have it to where they can't use the money. They can't use it for re-election. They can't make policy from it, really. And vote out the incumbents, make America laugh again. That's our motto here. And we are going to be starting to show this shirt around. And I hope that you join us, because this is a movement that's going places and we can actually turn the country around. Google has been one of the strongest companies. It has not had any problems, but if you look at it, starting to look like a rounded top and or a head and shoulders. It is high. It has gone up a long way for a big company like this. in a fairly short period of time. So I would look for Google to retrench. I don't know that I'm really negative on it, but it's due, and it's in a topping pattern, and that's all there is to it. So I would consider this a negative. So far we have negatives. Apple, we'll see. Microsoft, I would call this neutral. This is one. Ace, I know you hate Windows, okay? So just stop. I have to talk about Microsoft regardless. But in any event, Microsoft has actually held up pretty well. I expect this thing to come in. It's phenomenally highly valued. I mean, again, buy low, sell high, buy low, sell high. You can't buy high and sell low and make money. But it had a pretty sizable move the last couple of days. So whatever sponsorship it has, it's losing. Netflix is the standout performer. They just had earnings on Thursday, and the first thing they did was gap 115 points through the red line. Even though it's a solid line, it was a gap. Okay, so in other words, if you did not sell on Thursday, okay, you lost it. You had to wait for the stock to open up 100 points lower. All right, that's what I mean by people get trapped in these formations like that, and all of a sudden, in the blink of an eye, everybody's underwater and the entire psychology is turned around. NVIDIA, semiconductors have been absolutely the driving force, among other things. This thing is breaking down too. It's a phenomenally good company. I expect they'll have good earnings, and it could bounce here, but the overall long-term bull trend is kaput. The bank index coming down. Again, banks were pulling the market up, and now that the yield curve is flattening, they're not going to be so profitable anymore. Broker-dealer index, breaking down a little bit, are we? That tells you, along with that IPO ETF I showed you, that the new issue market and where they make money is evaporating, okay? We are probably not going to see SpaceX. I just don't think so. I don't know what it's going to take unless they rush it out and the market makes another shoulder and it's starting to look good or something. But, the whole IPO unicorn, everything coming at $200 billion on day one, that's over. Goldman Sachs, of course, being the primary peddler of stocks, and it's their greed that makes investors bleed. They had a hell of a year. All their bonuses are up by 50% year over year. I wish that I could get a job where I could screw up so badly, okay, as to fleece people and still make money. No, I really wouldn't want a job like that. I really wouldn't. I don't know how these people look at themselves in the morning. They get calls from their clients, I'm down 70%. Don't worry, it's a long-term hold. Things become a long-term hold once you're down about 50%. Then they're a long-term hold. JP Morgan also rounded top, it looks like, and it may bounce. It's at a place where it should bounce. This is a major bank. Yield curve is flattening, and one would expect exactly this. Critical financial company. American Express, same thing. Rounded top. MasterCard, another company that is a credit card company, very associated to, very correlated to the economy and retail. And it's kind of breaking down, but not as much as I would have thought at this point. Visa, definitely another one that is. So Amex, Visa, MasterCard, not looking good. Now, if we go to the retailers, we're going to see some carnage here. Costco is just gapping. This is the kind of action you see when there is a sudden shift in economic expectations. That's not going to obviate the need or make it unlikely that we'll see a bounce along the way. But this is telling you something. Look at that move. This reminds me of 2008 when all the banks were starting to do this. They were just gapping lower and gapping. You knew something was wrong. You didn't know exactly what until all of a sudden no one, the overnight repos froze and no one could meet their obligations. So I'm not saying something like this is going to happen, but I can tell you that Target's president, had an interview this week. They've done incredibly well. They're breaking down. And he sees the biggest problem for his firm right now is inflation. He says people aren't going out anymore. They're trying to live with less. And of course, they're going to have to live with less because there isn't more being produced. And it's just costing more. So they're going to have to live with less. And it's going to affect people like Target. So, and he's basically, the president basically said it. Home Depot, here's another one, just cascading down. All of a sudden, just ripping lower. If I were to show you other retailers, you'd see the exact same thing. Except for Walmart. And I put this in here as an exception, but it is so close to breaking down that this one could be joining them any minute now. Ford, I just put this in here because this thing was going crazy last week with all the EV madness. And I think a lot of the air, this is another sign that all the air is coming out of the balloon. FedEx, big rounded top. That's a 5-year chart. Looks like a head and shoulders to me. This thing does not look good. This is so economically sensitive. It does not look good. UPS looks a little bit better, but it also looks like it's broken down. So you have two major shippers breaking down, retailers breaking down, credit cards breaking down, tech breaking down, banks breaking down. And the only thing that's going up, and what we're going to be talking about pretty soon, is going to be gold, silver, and oil. 3 of the places where you can make money and start making money instead of losing money, and go against the crowd instead of with the crowd. Going with the crowd is a recipe for disaster. Anyway, I'm sorry, I'll get off my soapbox right now. I hope you've enjoyed today's program. I hope you like and subscribe. I hope you tune in next week. John Williams is going to be an amazing guest, and I can't wait to talk to him. And, please like and subscribe. It really helps us. We don't charge anything. We will be selling the shirts, but, I'm not going to force you to buy them. And, if you can pass this on to any of your friends, get subscribers to join the movement. If you're as disgusted as I am with the status of politicians in this country, it is a pleasure to wear a shirt like that. With that, I'm going to say thank you very much for tuning in, and we will see you next week with John Williams.